Taiwanese market is the one which is perhaps looking the worst at the start today.
The bill is principles-based. This is not a prescriptive law.
I think that the second half of the year is going to be more challenging than the first half of the year.
We open up with a cut-off closure around 30 points approximately.
Slightly, I think there is some amount of risk off, which is starting to come off a bit.
Core inflation is at 5.2%. So on that basis, RBI does not need to react today.
The policy repo rate unchanged at 6%, 6.5%.
At the moment, I think there's more upside risk to inflation in the absolute near term.
The Bank Nifty is still very much trading below its 50 DMA. It's been weak.
National Company Law Tribunal or NCLT today will pronounce its order.
Getting calculations from 95,000 crore to 1 trillion to even 1.1 trillion. What exactly is the extra? Some part of the extra...
You are not very much off the mark.
India is sticking out. In our market assessment, India has a growth rate of double digits.
So Nifty, that is down 86 points as we speak.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Nigel D'Souza and Surabhi Upadhyay. Hi guys, good afternoon. It's been a down day, right? At any point of time today, after the RBI governor spoke and he raised the red flag on inflation, the markets have been trading in the red. We're currently off from the session lows because at one point of time, the Nifty went below the 19,500. So we're off from the session lows, but still firmly in the grip of the bears right now. Half a percentage point gone on the Nifty and the sensex. It's a 93-point loss on the Nifty with the sensex lower by close to about 300 points. And it's the banks which are underperforming. The Nifty banking index is down about 0.75%. And this comes at a time when most of the global markets are holding up pretty okay. Currently, if you pull up the CAC DAX and the FTSE, we're showing you a gain of more than about 1%. So today's pressure is clearly this red flag on inflation, the higher than expected forecast on inflation, at least for the next 2-3 quarters.
I know this is exactly what we were discussing in the morning. I mean, though, of course, I appreciated Nigel's green shirt, I guess it didn't help matter as much, right? Because yesterday, this whole move that we had, this big, brave rally on the hopes of maybe some sort of dovishness, none of that transpired. So for a lot of people, there was nothing exceptional or different about the policy. But it's just for the market, because of the positioning yesterday, a lot of that had to be undone today. And that's what happened. So Nifty is still okay because we haven't broken yesterday's lows. But for the Bank Nifty, the weakness has been massive. We have been trading, below the 50 DMA for pretty much the entire session and below yesterday's lows as well. In fact, just to track those levels, yesterday's low comes in closer to the 533. That is yesterday's low. Now, let's see if we can climb above that, at least have a close above that. That would instill some confidence, but the weakness is very, very clear. And I guess, Nigel, it's also because this whole talk of what is happening with this incremental CRR hike that's come through. I was speaking to a couple of people as well. I think the sense is that it's transient. They're going to review it in September. But in the interim, there will be some pressure on the shorter end of the yield curve. And maybe because of that, some mark-to-market, treasury losses for banks. So whatever it is, I think it's become an excuse. And banks were anyway weak. There were never a leg that was supporting this market. So added problems there.
Well, that's right. First up, before I get to the market action, we have Grassim's numbers that are flashing for our viewers on the screen. And on a year-on-year basis, it appears like it's a weak set. But we need to compare it with what the street was working with. For Grassim, remember, bulk of the consolidated numbers are already in the price because you have Ultratech's numbers that are in. So two important numbers to look at. One is the VSF business and the EBITDA number out there. Now, Kotak had put out an expectation. They were working with around 300 crores of an EBITDA number for the VSF business. It's come at around 390 crores. So yes, it's lower on a year-on-year basis. Though on a sequential basis, it's improved big time. So the VSF EBITDA number is much better. Chemicals business, we've seen a lot of chemicals companies come out with their set of numbers, and it's been quite disappointing. So the Kotak as well was working with a sharp downtick of close to around 70% on a year-on-year basis. But the EBITDA number of even the chemicals business is quite good. That's come in at around 350 crores. So on both the parameters, you have to just look at both these two numbers for Grassim. Don't look at anything else. We'll track the commentary as well that's coming in there. But from the standalone business, the VSF business as well as the chemicals business, they've declined on a year-on-year basis, but much better than what the street was working with. So if you look at the standalone numbers, which is a smaller part of the total SOTP of the company, well, it's a bit of a beat on that front. Getting back to the market action, well, should be as you said, right? It's a bit of a hawkish pause by the RBI. That's the way it's being read. Whether or not it's because of this incremental 10% that you're talking about, or whether or not the job is not yet done. It's leaving it open-ended. Yeah. Are we going to get one more repo rate hike, going by the kind of inflation trends that we're seeing? So it's a hawkish pause from the Reserve Bank of India. Now we have the expiry that plays out, the weekly expiry, and there's aggressive writing being seen at around 19,550 to around 19,600 call. So yes, there is red on the screen. But I'll tell you what, the bulls, if they can get the markets up, another 20-25 points odd, since the 19,550 call is being written, the bulls will eye a move above that 19,575. If that happens, you can quickly get a 40-50 points from there as well. So 19,525, which is around 23 points away from current levels, that becomes important going by the options data. And your reference points on the downside are the Nifty lows as well as the Nifty bank lows. Both of them come up for you. In all probability, that 19,500 odd level should hold out. And even on the Nifty bank, you have the 44,400 odd mark. So that's a reference point on the downside. But watch for 19,575. Things haven't been gone in favor of the bulls today. But if they could get past that level, pull up the intraday chart on the Nifty, that will tell you where we are. We have 20 points to go to those levels. I'll track it very, very closely. The big question is, though, how you position yourself for the final hour of trade. Kush Bora joins us on the show. Hi, Kush. Good afternoon. What's your view of today's action? A little bit of red on the screen, but how would you approach trade from here?
Hi, Nigel. A very good afternoon. First up, thank you for having me on the show. Well, it's like the Nifty is getting into an early, long weekend-ish kind of a mood, isn't it? I mean, it's not gone anywhere for the past 4 to 5 sessions. Now, it's seen a lot of intraday volatility, but, this is a classic no trade zone kind of a setup. And, let me explain how. 19,500, 19,450 on the downside, we've tested this, a couple of times. 19,650, which is the 20 DMA, has been tested a couple of times. But Nifty just doesn't want to break out on the either side. Now, this could very well be the weekly expiry effect playing out. So up until, the index stays in this level, I wouldn't, take a trade on the indices. Plenty of, action in the stock. But once the, direction is clear, the Nifty either breaks down or breaks out, out of these levels, is when I'll play. So on the downside, if Nifty breaks below 19,450, I play for 19,300 as my target. Above 19,650, I play for 19,800 as my target. I know it's a bit of confusing view. Simply put, right now, no trade zone. Once the Nifty breaks above its band that it's been trading in for the last 3 to 4 days, is when you take a trade. Very similar view on the bank Nifty as well, just that the bias is slightly more negative here. 4,300 is the support zone that I'm looking at, and 45,000 is the resistance zone that I'm looking at.
Okay, so 19,450 to 19,650 is a bit of a no trade zone. Kush, any individual stock ideas?
Plenty. I'll share a couple of them. Actually, there's a lot of action, in the market, owing to results, a lot of news flow. So a couple of them. First is GPIL, Godavari Power and Ispat. This stock has been doing phenomenally well. It's given a very clear breakout at about 375 levels 2 months ago, and it's been gaining from strength to strength from there on. All dips have been bought into, and even the 20-day moving average has not been breached, since then. So a slight dip here from the levels of about 600. I would suggest a buy call on this one from a trading perspective. A near-term target, 585 and 600 is what I'll be playing for. 555 is where I will place my stop loss. The other
okay, Kush, I'm sorry. Kush, I'm so sorry. Really apologize for coming in like that. But it's just that this big news on Z that has come in, and it is a massive respite, at least for the time being. Well, guess what? The NCLT has approved the merger of Z Entertainment with Sony India. We're standing by to get some more details from Yash as to whether there are any further nuances. What is the NCLT saying about the future of Mr. Puneet Goenka and the current promoters in the company, which hold about 4% equity? But this is big news coming in for Z Entertainment. The merger has been approved.
The NCLT dismisses all objections in the Z-Sony merger case. So a big relief coming in for Z Entertainment. Remember, Z Entertainment was battling multiple issues. One, from the creditors, where they had an issue with the non-compete. So they had gone to the NCLT opposing this merger. Secondly, there was also that case in SEBI, where SEBI had said that Puneet Goenka and Subhash Chandra cannot hold any directorial position. They cannot hold any board seat in any listed company. So Z Entertainment was battling objections from multiple fronts, and it looks like they've pretty much got a clean chit with respect to its merger with Sony Entertainment. And this is big news. Z Entertainment and Sony merger news first came in about 1.5-2 years back. At that time, the stock price was 170 rupees. When the news of the merger came through, the stock continued to rally and went up to levels of 370. Right, just in a span of about a few months. And after that, from 370, which was the high about 2 years back, the stock had started correcting due to multiple inordinate delays.
So we need to keep in mind that this is an NCLT approval that has come in. There is still a matter pending before the NCLAT, but that deals with the Subhash Chandra and Puneet Goenka and some of their dealings with the securities market regulator and what they have to say about some of the other companies of the SL group. Sandeep Parekh is with us. Sandeep, the stock's running away as we speak. Because I think from an equity investor standpoint, people who are interested in Z, they've been waiting for this moment for many, many months. In fact, over a year now. Your first thoughts on the NCLT approval? Because as of now, the news that we have, it seems to be non-conditional. There's no news about the Puneet Goenka's future with respect to the merged entity.
Yeah, so I don't have an update on what happened in NCLT today. So you'll have to tell me what happened before I can comment on it, right?
Okay, the only line, Sandeep, that we're getting from our reporter Yash, NCLT approves the Z Entertainment Sony merger. 2, NCLT dismisses all objections in the merger case. These are the only 2 lines. You want to comment?
Sandeep, I request you to... Sandeep, just stay on. I think what we could do is Yash is already with us. He'll just give us a quick update and we'll come to you for a first reaction. Okay, all right. I think we'll just be getting Yash in a bit because he says that he's mic'd up, so I think we'll just get him.
So basically, essentially, Sandeep, what we know right now is that there are no objections. The NCLT dismisses all objections in the merger. Now, we don't know what that means. We'll stand by for our colleagues to clarify on that. But in the interim, what do you think?
Right. No, so I think my quick reaction based on this, I guess, brief news is typically, creditors, even shareholders, etc., can put in their objections before the NCLT. And I think it's a big news because they've rejected every single objection to what has been proposed between the 2 companies, which is the merger. I think that's really good news, I would think, for the company.
Okay, Sandeep, given the fact that, there are separate sort of proceedings that are underway at the NCLAT, I don't think that's settled as yet. The issue that the market regulator had with Mr. Subhash Chandra and Mr. Puneet Goenka, and I mean, that whole issue about SEBI saying that they should not take any key managerial positions on any board of any listed entity. Would that have any bearing here, or, would that be completely separate now? And this is a different story with a life of its own.
Yeah, so I think completely different story with a life of its own. I think you put it because, those are kind of go to individual accountability of those specific people. And here we're looking at the merger issue, which is just for NCLT. So that will play out on its own, and, where SEBI finds them having created violations, they penalize them. But it would presumably have very little or no impact on the company itself.
Okay. Sandeep, request you to stay on. We finally managed to connect with our reporter. Yash, can you hear us? Take us through the proceedings.
I can. So, of course, Rima, it's a big win for Z Entertainment at NCLT. Of course, the merger proposal was being heard by NCLT. And today, after reserving the order for almost a month, NCLT has approved the merger between Z Entertainment and Sony. Also, what they've said is that they've dismissed all the objections in the Z Entertainment Sony matter. There were objections which had come from certain creditors. Also, exchanges had put some objections before NCLT. All those objections have been dismissed by NCLT. Just to quickly take you through the objections, creditors like Axis Finance, JC Flower, ARC, IDBI Bank, IDBI trusteeship had objected to the scheme of arrangement between Z Entertainment and Sony, specifically with respect to the non-compete fees. Also, exchanges had objected, saying that SEBI had passed an order against the promoters of Z Entertainment. So all those objections have been dismissed by NCLT, and the merger has been approved today by the tribunal. Important to note two things. One thing is the way forward with the dissenting parties. Do they actually explore the opportunity to take this matter and challenge this approval for the merger before the higher tribunal, that is NCLAT? Also, what needs to be looked forward to is that what comes from SEBI's end when it comes to that important order against the promoters of Zee Entertainment, Puneet Goenka and Subhash Chandra, allowing or disallowing them from taking any directorship position in the merged entity. Because as you remember, Puneet Goenka is supposed to be the managing director of the merged entity between Zee Entertainment and Sony.
No, Yash, exactly. I was just going to ask you that. Did this come up at all in the proceedings at the NCLT today? Was there any reference to the future of Mr. Puneet Goenka? Because as per the original deal, he was supposed to stay on for the next 5 years. Did this come up at all?
Well, that's correct. So, as of today's order pronouncement is concerned, it was strictly and strictly for the order. So, of course, a two-line order was pronounced by the judge at NCLT. But when the last time the matter was heard at NCLT, this point did come up. There were dissenting parties who spoke about this impending order of SEBI against the promoters. And if this order indeed becomes effective, then how can Puneet Goenka become the MD of the merged entity? Here, a very important point was placed by the Zee Entertainment Council. They very categorically said that, that decision from SEBI is still pending. And irrespective of Puneet Goenka becoming the managing director of the merged entity or not, the merger should not be held ransom for that one particular order which is impending from SEBI. That remains to be seen what comes from SEBI's end, but that should not affect the merger at all. If at all, SEBI continues with its order against Puneet Goenka, then of course there is this option of finding a new managing director. And if not, then of course Puneet Goenka can continue as the managing director of the merged entity.
Yes, just one clarification. You told us that the exchanges had put forth SEBI's reservations about Puneet Goenka holding a position or a position on the board. So the fact that, it was put forth before the NCLT by the exchanges, this SEBI's comment. So if the NCLT has dismissed it, so in a way, indirectly, this case has been quashed, right, by the NCLT. They don't think it's a big issue.
So at NCLT's forum, of course, the case stands quashed because all petitions have been dismissed. But as I said, the dissenting parties still have the option of taking their request, be it the creditors as the dissenting party or the exchanges. They still have the option of challenging this particular dismissal of their request, of their stand before the higher tribunal, NCLAT, and then it depends on NCLAT whether it wants to take it up or not. So that option still remains available to them. But at this point of time, at the NCLT forum, all the objections which are placed by the dissenting parties, they stand quashed.
Okay. All right, Yash, thanks very much for the details. We also have Karan Taurani joining in, and I think Abneesh Roy of Nuvama should also be with us. Gentlemen, so, I'm just reminding all our viewers what the merger was all about now that the clearance has come through. If we just recall, Sony Pictures was to hold just under 51% in the merged entity, 50.86 to be precise. And Zee shareholders were supposed to hold 45.15%, with Puneet Goenka and Subhash Chandra, that entity holding just under 4%. So the majority was supposed to be with Sony Pictures, with 45% being held by the Zee shareholders. Karan, your first thoughts. So you were always in the camp that this will go through. I mean, we don't know if it gets challenged further or not, but for today, it's a big win, and I guess Zee shareholders will be happy. How would you see it, and what should shareholders look out for next?
I think this is a big respite that the approval has come in, and the bigger respite has come in without any kind of conditions. So right from SEBI to the creditors, there have been no conditions imposed in the merger, because that could have also potentially led to a delay. Now, we actually await the decision on the Goenka family in terms of what is the future outlook for them, whether or not they'll be a part of this. But as we see, as where things stand today, I think there is a very high likelihood of the merger probably going through without the Goenka family, because Mr. Puneet Goenka has also stepped down, from the board of Zee as well. But all in all, I think it looks good. And from here on, I think going ahead, one could start exploring the actual synergies of the business. And I think the run-up right now is more in terms of the valuations showing respite because of the merger going through.
What valuations is it trading at currently, and what are the factors you're going to be looking at from here on, Karan?
So I think in terms of valuations, if you see, I think the core broadcasting business piece would be trading at somewhere close to 14-15 times PE currently after this run-up that we have seen. And we valued Z on an SOTP basis when we've assigned a multiple of 17 to 18 times on the broadcasting business. And we've also valued the OTT business and the cash infusion that Sony will be doing. So basis everything, we get a merged core market cap of somewhere close to about 65,000 crores. And if you take the Z stake today in that, the market cap could be in the range of about 30,000 odd crores. So there's a good enough 25% upside, 20% upside from current levels as well.
Avnish, do you want to comment on the upside for Z Entertainment? Because about a year back, Z Entertainment price had even gone up to levels of about 370.
Yeah, 3-4 key things. One is, of course, today it is a verbal announcement. We should also wait for the detailed final order. If you remember in PVR Inox merger case also, the detailed order took some time. In this case, our sense is it should take much lesser time than the PVR Inox deal. So we need to wait for some fine print there. But clearly, we were expecting this. This is a significant positive. In terms of valuation, if you see, of course, it is quite cheap. And in fact, Sony will be putting in $1.5 billion. That itself value will be close to 50 to 60 rupee. You're absolutely right. If you remember, before all this twist and turn, one approval coming, two approvals not coming, the stock had gone up to 370 level. So I see no reason why, once we have more clarity on the SEBI promoter issue also, and once we have the advertising recovery, if you see in Q1, Z did not do well on the advertising front. But we track consumer companies very closely. There is a good gross margin expansion. There is no reason why in the coming quarters, all media companies, including Z and Sony, will see very good gradual recovery. Subscription revenue, if you see 18% growth, Z already saw. So I see no reason why the 370 level, which was seen earlier, should not go back definitely. And I think over a longer term, if no further skeletons in the board or say any other SEBI issue, which we continue to monitor, if they don't come, I would see even beyond that. So we remain quite positive, but we continue to monitor the detailed order and any fine print thereof.
Sure. Karan, Avnish, just stay on. We want to discuss more of the business aspects with both of you. But as you said, this is all contingent on the legalities going through smoothly and the deal progressing. So for that, let me just go back to our legal experts. Of course, Sandeep Parekh has been with us. We also have Mr. J.N. Gupta joining in for a quick view on this. Mr. Gupta, I think this is a question we were asking Sandeep as well. Now, we just know that this has been approved by the NCLT without any sort of changes. It has dismissed all sort of issues around the deal. What we don't know is whether the ongoing issues that SEBI has with Mr. Subhash Chandra and Puneet Goenka as promoters, that matter, which I think is right now resting in SAT, whether that could kind of skew things in any way. Do you see this as a clean approval? Mr. Gupta?
I hear you, so I tell you one thing. The organization or a corporation or an entity is different of a person. Now, in this case, NCLT has just given approval of merger between Sony and G. Now, when we say the Sony and G merger, there was a condition that Puneet Goenka will be MD. But that condition was there as long as Puneet Goenka was not prohibited by any other law of the country for becoming MD. So we have to see this merger as a separate, and any other proceeding that is going on, whether it is by SEBI, RBI or whatever it may be, as a separate. What happens to the that proceeding and what is the consequences of the proceeding, it will be bound, the new entity will be bound by that. So if today there is a stay on Puneet Goenka's directorship, but tomorrow if SEBI says, and SEBI, the last court in the country says that Puneet Goenka cannot be a director, then he will not be a director in the merged entity. So as far as the merger of two entities are concerned, there is no issue. But as the previous speaker had said, that the devil lies in the detail. So we do not know what is there in the final order. But as I hear, yes, he said that it is an unconditional approval. So that means it is the approval is there, the two entities get merged, and consequences of any future order will be on the merged entity. Merged entity cannot say that NCLT has approved, so I will not follow what SEBI says. No, it is not. So that orders are separate.
Sure. Mr. Ranina is joining in the conversation as well. Mr. Ranina, just to fill you in, the one line that we know is that NCLT has dismissed all objections in the Zee Entertainment Sony merger and it has approved the merger. How would you read this? I think a lot of the investors want to lap up, and talk about the business prospects and the synergies from here on. But we need to understand whether, in your opinion, this is a clean approval and whether the deal can indeed go through.
Yeah, of course the deal will go through. I think they have all the objections have been set aside, and unless there is some very fundamental flaw in the order of the NCLT, I don't think even if somebody goes in appeal, they were going to succeed. So I think the deal should go through and will go through. As far as Puneet Goenka and Mr. Chandra are concerned, that's a separate issue. This will take its own time, whether they are fit and proper person to be the managing director of the company. That's a separate issue. But the important point is that the main structure of the deal has been approved. All the stakeholders have approved it. More than 99% of the shareholders have approved it. And there's no reason why this merger will not go through. It has to go through. I'm expecting it to be over in the next 3 to 4 months.
Okay. All right. Gentlemen, Mr. Ranina, Mr. Gupta and Sandeep, thank you very much for giving us your legal perspective on this. I do request Abneesh and Karan to stay back because we have some more questions on the stock and the life ahead now from a Zee investor standpoint and what the market will look at. Quick break. We're staying with the Zee story and our eye on the market as well.
Welcome back. Well, the big news is that the Sony deal have got a clearance coming in from the NCLT, and that explains why the stock that was locked up close to around 10%. Now it's moved up to around 15% as we speak. It's moving from circuit to circuit. To analyze the stock, well, we're joined by Hemang as well. I think joins us on the show. We already had Abneesh as well as Karan. Well, let's go across. I think Karan is still with us. Karan, I want to put a question to you. Well, the condition was that if Puneet Goenka remains a key managerial person, then he was subject to a non-compete fee, right? So what happens to this 2.1% stake that comes from this non-compete fee if Mr. Puneet Goenka doesn't remain a KMP? Karan, wanted your view on this?
So I think if he doesn't remain a KMP, even then, I think the non-compete fee is something which would be given to him in any case. And I think there is a high likelihood of this scenario emerging, as I mentioned earlier. And I think in terms of the broader strategic things, I think internally they will obviously have started, working on various things or various combinations in terms of management. Probably, you could have somebody from Sony taking charge over here. And maybe, over the next 1 year, 1.5 years after this SEBI issue started, Puneet could also be got back. So still everything uncertain over there, but definitely non-compete is something which would be given to the Goenka family.
I think it stays. Abneesh, do you concur or do you have a different view?
Yeah, definitely. If you see, there will be some timeline for Puneet not being there. It is not an indefinite timeline. Second, definitely, Puneet knows this, and that's why he has formed this professional body which is taking care of the day-to-day. And he has said his intent is very clear that the merger should happen, and Sony is also very clear. So I would say that, yes, definitely, Sony also has been in India for more than 25 years. They understand this business extremely well. The corporate governance concerns will go away because the board will be 9-member team dominated completely by Sony. CFO will be Sony. So I would say that it's the best of the both worlds, and definitely for Puneet also, he knows that longer term he has skin in the game. 1 year, 2 year will be, say, the kind of scenario where he will not be in case SEBI continues to have that view. But longer term, he will continue to have skin in the game.
Karan, one of the reasons for the upside on Zee Entertainment post the merger deal was the expectation that the combined OTT platform of ZEE5 and Sony is going to be a very formidable player. Right, but in the last 1.5 years, there have been a lot of changes in OTT. Jio Cinema, for instance, has strengthened quite considerably and has emerged as a very strong competitor. Amazon has cut the prices in India. So, what were the synergies that you were anticipating from the combined OTT platform 1.5 years back when the merger was announced? And does it change today, given the changed dynamics?
Yeah, so I think if you look at the OTT business valuations, what we have done is we've signed a very low multiple for the OTT business, about 2.5 times sales. But if you look at the dynamics, I think the landscape is clearly changing. The competitive intensity is coming down because many of the smaller players are kind of on the verge of consolidation with the larger players, or they are partnering with the larger players rather. OTT as a business is all about scale. And just as on TV, if you see, they don't have too much of an overlap. Similar as on OTT as well, wherein Zee is very heavily focused on regional, on tier 2 and tier 3 markets, and Sony is more urban and sports-led. So I think the OTT platforms coming together will be like a big benefit for the merged co. And, it will lead to basically cost-cutting initiatives. It will drive good efficiency around content costs, around tech costs. And you could also see the platform achieving profitability over the next 3 to 4 years. But nonetheless, I think disruption is there because of Jio Cinema, and that is here to stay. You may not see growth rates in OTT of what you've seen in the past because now the base is kind of penetrated. And secondly, SVOD revenue may not grow because, platforms are cutting ARPU, as you mentioned here. But nonetheless, I think it's going to be a big boost in terms of the overall valuation of the merged co because of the OTT business.
And just reminding people, as the stock is running away and climbing away today, around the time when the deal was announced, which was December of 2021, the stock was around 340, 350 thereabouts, if my memory serves me right. So it's still not gone back to those highs around the time of the deal announcement. Hemang Jani is also joining in the conversation. He's been waiting patiently. Hemang, this Zee news has completely hijacked everything else in the market. We thought we'll discuss the Reserve Bank and banks with you, which we'll get to in a bit. But first thoughts on Zee. What's the house call? And what are the target prices you would work with, assuming that this overhang is well and truly out of the way?
Good afternoon. So clearly, this removes a major hurdle and overhang for the stock. As we all know, it's been a difficult period for last almost about 1 year. So I think that is certainly a big positive. I also saw a discussion around Mr. Puneet Goenka, whether he will be continuing as a CEO and whether he'll be paid non-compete fees. I think in both the scenarios, things are looking much better because there are section of investors who are more comfortable with an independent, CEO with corporate governance issues, etc. And that would surely have helped the company. And even if later on Mr. Puneet Goenka is allowed to continue, I think, it would be viewed positively in some way. So I don't think that by itself is a big factor at this point of time. I think given the synergies, given the uncertainty which was around that, because of which many things they were not able to implement, I think that clears off, and surely there is going to be a big re-rating of the stock as we move into next few weeks.
Okay. All right. Got that. Well, gentlemen, unfortunately, have completely run out of time. I mean, Hemang, special apologies to you. It's just one of those days where news completely took over. But we hope to have a much longer chat on other issues as well. Karan, Abneesh, thank you very much for joining in and helping us make sense of this big news that's come in. The Zee-Sony merger finally getting an approval from the NCLT. Well, with that, let's come back to the market. It is just after 3 o'clock, 3:05, and the market continues to be pretty much in a range. We're still down, 100 down on the Nifty. The Bank Nifty is down about 340, but the picture is much better than earlier in the afternoon when the Bank Nifty was almost sliding all the way to the 44,400 level. So from that standpoint, it's not that bad. Otherwise, of course, it has been a down day. Trideep Bhattacharya, Chief Investment Officer Equities at Edelweiss AMC, is our next guest on the show. Trideep, thank you for joining in. No, we will not ask you about Zee, but actually come back to the rest of the market, really. It's been an interesting policy. And I think for some people in the equity market who are positioning for some kind of a respite or dovishness from the Reserve Bank, they were really disappointed. But what do you make of things? And I want to specifically ask you about the banks, because this ICRR announcement, incremental cash reserve ratio, that seems to have become a bit of an excuse, at least for near-term selling. What do you make of it?
Good afternoon. Thanks for having me on your channel. I would say that, overall, if I were to look at this RBI policy, one of the things that I have been talking about of late has been that inflation is likely to be stickier than usual. And I'm talking globally, not just in India. And as a corollary of that, obviously rates might, in terms of coming down, might be a little bit stickier than what people anticipate. And hence, in that context, whatever came out in the form of RBI policy is not particularly surprising. The first respite, why we saw a bit of strong reaction in the equity markets over the last 3 or 4 months, is that rates have peaked, but rates coming down, in my opinion, will take a little while. So that would be how I would think about it more generally. With regards to the second question on banks, I would say that this is a short-term measure. Given that there's excess liquidity in the system, I think what RBI has done is basically taking a bit of liquidity out. So I think, I don't read too much from a long-term standpoint into this. They are doing what they are doing. I think on net balance, what you are seeing is a bit of profit booking across stocks, across sectors in markets, on the back of the fact that we've just had a result season which has gone by, and broadly earnings have been in line, and the stocks have done quite well over the last 3 or 4 months. That's how I see it, more like a fair value market with a bit of correction coming on because of profit booking, rather than, and the excuse being maybe, today's RBI action, rather than this being the driver of the same.
So Trideep, in the last 1 month, which were the themes that you topped up your exposure on? What did you buy?
So I think one of the things that we liked in the last earnings season was basically the pharma results. And I think last time when I came across, we said that overall pharma as a sector earnings have normalized and, could look a little better. That fortunately turned out the way we thought about. And I think during the course of the result season, whenever we found an opportunity, we have sort of, added on to that. One of the hypotheses that we were playing in pharma for the last quarter or so has been the little bit of resilience in the United States generic market. And I think as we see more data points coming to that effect, we have kind of done a bit of top up, not a whole lot, but a bit of top up on the pharma names with regards to wherever there were gaps in what we held. So that's what broadly we have done on net balance. No significant changes. Maybe a bit of profit booking in capital goods, but that's about it. All in the fringes.
Right. Hi, Trideep. Good afternoon. Well, good to hear your views on a couple of sectors. But, the big sector for the Nifty is the banking names, and that's been underperforming. Now, some would say that it's giving a good entry opportunity because we are seeing a couple of banks, irrespective of what the numbers are, they don't react positively. Telling you the street is a little bit concerned about the near term. What's your view out there? And would you look at this as a buying opportunity, or would you stay by and say, well, we'll get lower levels and that's when we look to get it?
Yeah, I think great question. I would say that, broadly speaking, lending financials are in a good spot for the next, over the medium term, i.e. 1 to 2 year perspective. Because broadly, asset quality worries are not there and credit growth is relatively decent. That still holds true. But if you go one level deeper, you also know that the NIMs of the banks or the banking sector have by and large peaked. And I think people, when they look at the results from this fine comb, are finding incrementally results are broadly in line or slightly the margins or slightly lower. I think what you saw of late in the last result season was a bit of reaction to that. I think there is a bit more to go, but that's more call it a midterm correction rather than changing the course is the way I would read it. So I will stay the course of lending financials being in a good spot. A bit of profit booking is in order, given that some of the best times in terms of NIMs might be, or net interest margins as they call it, is behind us.
And I think that's one of the reasons why bank stocks have been sulking of late. It's been a subdued earnings season in terms of just stock price movement. So, Trideep, finally, what do you have your eye on? Anything new that comes to mind? At least some of the, let's say, the platform companies started reporting profits this time. Pharma, we've discussed, it's done really well. And also throw in a word on some of the big capex plays, because here stocks have run up a lot. Are you happy with the kind of results you've seen?
I think basically, so the answer is with regards to capex theme, let's start the last one first, is by and large, yes. I think on net balance, expectations are reasonably high on those names, and what they have delivered is good numbers in terms of growth terms, but versus expectations, they were kind of in line to marginally better. There have been exceptions like the largest EPC company, this, that, the other. So we are a little more selective within industrials going forward, but nevertheless fairly positive on the capex theme overall. We now have to juxtapose that with regards to the next 1 year, the elections coming up would be the kind of point that I would throw with regards to that sector. I think what we are keeping an eye on are basically overall how a bit of macro, but how the regional elections, etc., that from here till the year end are likely to pan out could cause a bit of macro volatility as it turns out to be. And with markets where they are, it's really more stock-specific nuances that we are focused on rather than those sectoral themes. I think those sectoral themes, by and large, are captured in the price. It's now within those sectors. If there are any pockets of mispricing, like the ones I talked about in the case of pharma, that's where money is to be made more. So that's what we are focused on.
Trideep, thanks so much for stopping by and giving us your view on a whole host of sectors that we discussed. Short but effective chat. Appreciate you stopping by. Well, for the time being, though, the Z Entertainment stock that was moving from circuit to circuit at higher levels, it's seen some kind of selling. So it moved from 10 to 15% circuit, 15 to 20%. But at 20%, there is some kind of give off. And the stock has come off close to around 6 rupees from the top. For the time being, though, let's take a short break. But as always, we'll get you the buy, sell, or sell calls from our technical experts. Stay with us.
Welcome back. You're with us on Closing Bell, and we're still looking at a red screen, but at least it's it's not broken the day's range, though of course it's been weak. There's no two ways about that. Kush Bora is back with us. Kush, what do you make of things? What's the advice on the index and any other specific stock calls that you can share with us?
Recap quickly on the index what I said a while ago, which is no trade till the major levels of 1940 and 19450 and 19650 are taken out on Nifty. Beyond that, we'll see. And perhaps we'll see the indices move beyond this, once the expiry is done, maybe tomorrow or by Monday. So that's the view on the indices. Currently, it's a no trade zone. As far as the stocks go, GPIL is one that we discussed briefly. But from a BTST standpoint, I've got two of them. One is Canfin Homes. Now we're seeing a very steady recovery after the sharp fall. And this stock's actually had a history of recovering quite smartly, once these kind of news are out and, it's formed a base. So Canfin Homes is a stock that I have on my radar from the buying perspective. 775 and 795 would be my target, 730 my stop loss. The other is from the cash segment. It's Kaplan Point Labs. This has been gaining from strength to strength on the back of very good volumes, and this is the third straight session and the stock is actually closing at a very high point. So Kaplan Point also remains a buy. From a trading perspective, 1090, 1120 are my targets. 1030 is where I would place my stop loss.
Got it. All right. Thanks a lot for that, Kush. Well, the MSCI as well will be releasing its August index review tomorrow. Vivek joins us to fill us in with the key expectations. Vivek.
Well, good afternoon. That's the one. It's an important development because MSCI tomorrow, as you mentioned, would be releasing the August index review, and the key index that would be tracking is the MSCI Global Standard Index. Now, quant analysts have already started making their predictions as to which are the components of which are the stocks that will be making their entry into the index and which are the ones that will be making their exit. As per IIFL Alternative Research, here are the list of stocks that are expected to make their entry into the MSCI Global Standard Index. This particular time, Cummins India should make the cut, $193 million worth of flows. Astral is another name, $164 million. HDFC AMC, post the block, over $150 million flows expected. Power Finance Corp, $192 million. Ashok Leyland as well as IDFC First Bank. These are the names that are expected to make the cut. Another name that, that will be kept on the radar is Polycab. In this particular name, it's a slightly tricky one given the fact that analysts have penciled in July 18th closing price as the cutoff. In that case, Polycab 2 makes the cut as an inclusion candidate. On the other hand, as far as exclusions are concerned, ACC would be making its exit, $90 million of outflows expected there. And another anti-consensus call as far as IIFL is concerned is Jubilant Foodworks. They expect Jubilant Foodworks to be out of the index, and a significant selling pressure could be seen here. Over $133 million of outflows could be witnessed there.
Okay, all right, got that. Thanks very much. We'll keep that in mind, Vivek. Those are the index changes we have an eye on. Well, let's get back to the big story today. The Reserve Bank of India today announced an additional cash reserve ratio of 10% on incremental deposits that banks collected between the 19th of May to the 28th of July to neutralize the extra liquidity created by the return of the 2,000 rupee notes. And perhaps that's become one of the reasons why people have sold off bank stocks today. Lata is here to explain the announcement and potential implications. Lata, you've been speaking to a lot of bankers also on this. So what do you make of things?
Well, yeah, I see RR is incremental cash reserve ratio. Let's remember that cash reserve ratio is always a negative for banks. You collect deposits at whatever 8-9%, but you have to keep 4% of that, 4.5% of that idle. You're actually losing. But here, deposits, why have they done this? The total deposits in the system on May 19th, when the 2,000 rupee withdrawal was announced, was 183 lakh crore. And on July 28, it rose by nearly 10 trillion to 194.9 lakh crore. You rarely ever see in 2 months a 10 lakh, 11 lakh crore of deposit expansion. This is because everybody went and deposited their 2,000 rupee notes. But that is not the only reason. We will come to that. The point is to remove this liquidity impact. Already the vegetable prices are high, and to that you add more liquidity, more money chasing goods could make them expensive. So this is kind of an anti-inflation measure as well. You don't want too much liquidity lying around at a time like this. But the spurt in deposits, because of 2,000 rupee notes, is about 3.14 lakh crore. That's the amount of 3,000 rupee or 2,000 rupee notes that came back. Of that, 88% went straight away as deposits. That's 2.76 lakh crore. But look at the additional deposits. It is almost 11 lakh crore. That's because HDFC got merged with HDFC Bank starting from July 1st. That's what makes the number very big. So when the hit comes of keeping a little more money idle and not lending it, that is 10% of the extra deposits, HDFC Bank is likely to get a slightly bigger hit. Because if this measure had come before July 1st, they would have had to keep a little less. Now there is a big merger impact as well. And therefore, the hit is temporary. September 8th is when they are going to review it. Because September 15th, there is advance tax payment. So money goes out of the banking system to the government. September 28th, GST payment. Again, money goes out. September 19th is Ganesh Chaturthi. That is the start of the festival season. Huge purchases, that is cash withdrawals, are made. Deposits are withdrawn by people to make purchases. From September 19th onwards, then there is Dussehra in October and then Diwali in November. That is the big cash withdrawal period for the Indian banking system. So Reserve Bank appears to argue that by then liquidity will automatically lessen. So we need to take a call on September 8th whether we can end this cash reserve ratio, keep it only for 2 months. That's from May 19 to July 28. We will know on September 8, chances are they will remove it on that day. But nevertheless, for 2 months, banks are getting a punishment. One bank is getting a slightly bigger punishment.
Okay. All right, Lata, thank you very much for explaining that in a very nice, concise and simple manner for us to understand. And that also explains why bank stocks have not been really able to recover too much from the lows today. We'll take a quick break, come back. We're practically in the last leg of today's trading action. Get you all the details.
Welcome back. Ambarish Balika has been patiently waiting by. Ambarish, thank you so much. I want to straight away get to the stock recommendation for the day, Aether Industries.
Yeah, Aether Industries, which is a major chemical manufacturer for pharma, agrochemicals and oil and gas sectors. Contract research and manufacturing is also a major revenue source for them. And nearly 8% of the total revenue is actually spent on research and development. And in many of the products, they are the sole Indian manufacturers, which actually gives them an edge. They have about 290 customers across 22 countries, marquee clients across various sectors. And recently they completed a 750 crore QIP, and these funds are being deployed in capacity expansion. If you look at Q1, it was a bit muted, but if you look at the last 5 years, they witnessed a 44% CAGR as far as revenue is concerned. And raw material prices have also corrected in the recent past. So we should see this reflection in Q3 and onwards. So expected EPS for FY25 is about 20. And my target price out here is about 1280.
Okay, all right. Ambarish, apologies for that. Thanks so much for joining and giving us that stock. We're going to track it very, very closely. And next time we join in, we'll ask you for an update on that as well. For the time being, though, we need to wrap up on the market action. So let's wind it down. Well, we started the last hour at around 19,550. We swung a little bit, 20 points either which direction, but otherwise we're ending pat at that number. What lost out today? Asian Paints was down close to around 3%. Kotak Mahindra Bank was down close to around 2%. Big Boy ITC was down close to around 1.5%. On the flip side, the Adani Group stocks did quite well. Adani Enterprises, Adani Ports. You had IndusInd Bank that was outperformed from the banking pack, and Titan as well, that was up 1%. What else?
Well, on the mid-cap end of trade, lots of movers. So Pidilite slipped close to about 3.5%. The top line was slightly lower than what the street was anticipating. Page Industries came out with their numbers in the last 1 hour. The stock closes with a gain of 3%. Here, the street is focusing on the quarter-on-quarter improvement in the performance. On revenues, volumes are up 31%. Margins, too, have picked up quite smartly. Other big gainers, it's got to be Z Entertainment. That's the big star in today's trade, closing up with a gain of about 16% after NCLT gives its approval for its merger with Sony. So Z Entertainment rallies on very large volumes. Other notable movers, Varick Engineering, Force Motors, Max Financial, Suzlon. Strong demand for its QIP. And on the losing side, Bata, Granules, Suntech, BSC. These stocks took a bit of a knock on the back of numbers.
Yeah, absolutely. Z is a big star in the mid-cap market action, really towering ahead with that 16% gain. 3M India had good numbers, 5% up on that stock. Max Financial, of course, cheering the additional equity stake pickup by Axis Bank, along with the numbers as well, which looked okay. So all in all, not a bad session. The mid-cap index is ending absolutely flat, far better than the Nifty and the Bank Nifty. But even for these indices, from the lows of the session, Bank Nifty was, hurtling close to 44,400. From that level, at least, there was some recovery. And for the Nifty as well, along with some recovery in the banks, you had Reliance, which was doing some heavy lifting, and a little bit of buying in the Adani stocks also helped matters. But all in all, we're ending with an 80-point cut on the Nifty. The index going home at 19,551. Well, that is this action-packed Thursday. Thank you very much for being with us on Closing Bell. It's a wrap from this entire team, but don't go anywhere because our Thursday special Big Deal comes up next.